On this episode of The Trade, we'll be focusing in on currency markets, and to take us through his favourite pairs, we're joined on the program by Clifford Bennett, Chief Economist at ACY Securities. He comes to us via Skype. Clifford, welcome back to the program and thanks for joining us. Look, our currency markets have come alive after a pretty subdued period, so let's go through some of those big currency pairs at the moment and have a look both from a technical and fundamental standpoint as to where things stand. I believe that the first one you want to go and kick off with today is the Euro-US.
Well, it's been such a Goliath-type battle, David, between, the story of Europe, which is coming out of COVID, learning to deal with it better, versus the United States, high vaccination rates. So both sides doing well on that front. But of course, Europe has a massive trade surplus future outlook, as well as in the past, whereas the US situation, as we saw with goods data yesterday, continuing to plummet away to the negative historic lows. And that trade imbalance is something that's always going to be slightly favouring the euro. But at the moment, I guess the twin economic forces attacking the world are inflation and delta. And bizarrely, both of those support capital inflow towards the US. It's part of the reason why we're seeing US stocks go up. So therefore, it's very supportive of the US dollar. And some of that too is US corporations wanting to repatriate funds back from other parts of the world, including Europe, because they feel like in the United States, and it doesn't matter if you agree with it or not, fund managers in the US, corporations, the big global brands in the US feel like the US is managing the situation better than anyone else. And therefore there is some bringing home of funds still going on. That's supporting the US dollar. That's why we've seen such a good, strong run of the US dollar in recent times. But the $64 question is it time for that to reverse? The euro chart there, obviously ticking up. It's still in that previous consolidation range though, so it's not confirming in a price action sense that we have seen the low for the euro or a top in the US dollar. So I'd be very careful here that we might get from this point after this rally in the euro, a little bit of a sideways consolidation period for perhaps a few weeks.
Okay, how important is the Federal Reserve when it comes to this currency pair in particular? Because we've seen those yields come back a little bit when it comes to the Federal Reserve. Of course, we know the ECB is going to be on hold for a very, very long time. If the Fed turns more hawkish, say, in the next couple of months, particularly at that Jackson Hole symposium, could we go and see that euro come under some renewed pressure?
I think that would certainly be the case if I was speaking at Jackson Hole this summer, this time round, David, but because I'd be really telling them that inflation is not transitory, it's going to be even higher and it's going to last quite a long time, perhaps 1 to 3 years, and something needs to be done. So yes, that is the other key factor, as you're pointing out, between the euro and the US dollar. It's about expectations of when who will be first to be raising rates. And of course, that will be the US Federal Reserve. So very much looking for them to hike sooner than even they know. They don't realize how soon they're going to have to hike, because belatedly they'll figure out that inflation isn't transitory and then they'll panic and they'll hike more than they otherwise needed to have done.
Have you got a forecast on the euro dollar for the time being?
For the euro dollar, I really feel like in 1, 2, 3 weeks from now, we could be exactly where we are, but we could have seen a bit of volatility in both directions. I wouldn't be surprised if the euro continues to roll over for a weaker US dollar moving forward.
There we go. So that's for the euro. Let's go and have a chat about just across the Atlantic when it comes to the UK economy. Now, British pound has been a bit of a standout performer against other pairs, including the Aussie dollar, which we'll get to in a second. But I want to go get your view on that, the cable, US dollar versus the British pound. Where do we stand there? Because both of those economies are very similar in that they're highly vaccinated and they're now in the process of reopening up.
It's always nice when you can stand there as an FX commentator and say, sterling performance by the pound. But it has been a sterling performance. It's been straight up like a rocket ship for quite some time now. And that is, of course, not only are they coming out of lockdowns in a very ordered fashion, but they look to have developed more nuanced policies in response to virus surges. And also we're seeing hospitalization numbers or case numbers start to fall, hospitalizations still going up. So people are a little bit hopeful that it's not a perfect outcome by any means, but the UK is learning to live with COVID. And that's one of the reasons people have decided perhaps sterling is finished with it's being pushed underwater, if you like. And there's a lot of rebound capacity there. We've already been seeing it for 2 weeks now. Does it continue? I think it stretches a little higher. But again, it might just pull back on some sort of broad-based US dollar consolidation after these big moves.
Longer term, where do you see it going to? Because, of course, a lot of people are looking at what the BOE is up to as well. Now, the most hawkish member of that committee has now gone and left. So we can see that very strong uptrend that it's in at the moment as well. Longer term, can it go and revisit those highs in that chart, or are we still looking at that king dollar being the strength?
Yeah, no, good point, David. I think it's going to go probably, it can run to 141.50 reasonably easily, obviously, I think. But if you wanted to look at the big picture here, there's no reason why sterling can't be 145 and perhaps in 2 years' time, 150, 152. So there is a very positive outlook there for sterling. That would require the US dollar to sort of have a bit more strength, running on the idea of repatriation of funds, and everyone else in the world who's fearful about their own countries moving funds to the US. So that will be supporting the US dollar for quite some time. But when that has run its course, or if equity markets were to top out, that capital inflow to the US would stop almost immediately. So watch, if equities cap out, I think you will see a weaker US dollar this time round. And that could get sterling really boosted quite strongly to the upside.
Yeah, keep a very close eye on that current account as well. Look, let's go and finish off with the Aussie dollar. Now, we've seen the euro trying to go and form a rounding bottom there. We've had a big bounce in the pound, but the Aussie dollar is still in the wars, really struggling. There's people talking about 70 cents and below being in prospect, given the divergence in what we're seeing in health comes, in particular around the world. What's your sense as to where the Aussie's future lies?
Yeah, thanks, David. I think ACY was probably the first to turn bearish on the Australian dollar. I think it was actually, I don't think I've said this before, but if anyone's watching this show, they know I've said it on every show. It was on one of your morning shows that at 77.45, when everyone was still bullish, right up there in that right shoulder of that head and shoulders top formation, I said the Australian dollar is going to 70 cents. Not a lot of people believed me at the time. We're over halfway there now. We still have a 70-cent target. We were the first in the market to call it. I do think there is potential risk, and I've said all the way down there was potential risk to 68.50. The Australian dollar had its good run. It was fully priced and it was overpriced on this idea that we're some sort of invincible country at the bottom of the world, and therefore you just keep buying Australia because China will keep buying our goods. That argument has some validity, but there are some negatives for Australia as well, and the ongoing disruption to global supply chains. The lack of global travel impacts specific industries like tourism, but also education. And the lack of immigration to Australia is a major problem going forward for the economy in the medium to long term. And so the Australian dollar was way overvalued. And you can see by this immediate sideways consolidation, it hasn't enjoyed the rally other currencies have as the US dollar's come off a little bit. It just underlines how weak this currency is. And on the gossip side of things, David, I have heard that there's still a lot of hedge funds in New York caught long the Australian dollar up near 77 cents. They weren't watching the show, ausbiz, or listening to ACY, so they're in trouble. And they still need to get out of those positions. Aussie still very bearish.
Yeah, long and wrong for the time being. Of course, we're looking at iron ore prices as well, which a lot of people are talking about downside as well. So maybe it's not going to be working in the Aussie's favour for a while. Let's go and have a look at cable Aussie now, British pound, Aussie dollar cross, and see what we're looking at there, because that is a story of contrasting performance when it comes to health outcomes.
Yes, we've been very bullish sterling Aussie for quite some time. It's not quite the Olympic Aussie gold. So it is sterling Aussie, and I think it's sterling Aussie that's flying higher. It has been for some time. There's no reason why this process cannot continue. In fact, I'm not even going to put a target on it. I just think it's in an acceleration phase on a long-term, medium to long-term sense and process. So plenty of upside there. Doesn't mean there isn't going to be volatility. It does look like it's due some sort of short-term top here or correction, but it's how the forces play out. Again, sterling US dollar, Aussie US dollar, but I do think overall sterling Aussie remains, as we've been saying for a very long time, a very strong buy.
Yes, I think next time that we have the international border open and the Brits coming down under, it'll be a much more cheaper visit than when they were here last. We'll keep a close eye, but certainly contrasting fortunes there for those two currencies. Clifford, great to go and have a chat. Look forward to going and doing it again. Take care, and we'll speak soon.
Thank you, David. Take care.